Ford reporting lower than expected fourth quarter revenue. Let's check in with Bob Shanks, the automaker's chief financial officer. Hi, Bob. Welcome back. Good to see you. Your adjusted earnings per share was a few cents below consensus. You sold almost 900,000 F-Series trucks last year. That's up 9%. Are you trying to diversify that to have more stars than just the F-Series truck?
Oh, we already have more stars than just the F-Series truck. Our whole truck lineup around the world is very, very strong. We're the commercial leader in terms of brand in Europe. The Ranger compact pickup, which is coming here early next year, is already the #2 compact pickup around the world, and that's without the sales in the U.S. So we've got a really strong truck lineup. Of course, our SUVs are very strong as well. So we're not a one-trick pony, Scott.
All right, and a few weeks ago, Ford issued guidance for 2018 earnings per share between $1.45 and $1.70. Investors were disappointed. You reiterated that guidance today and blamed higher commodity costs. Could you elaborate on that? It seems like everyone has to deal with that headwind.
Yeah, I think it says a couple of things. It's actually commodity cost plus exchange. That was a headwind of over $2 billion in 2017 combined. We see a somewhat smaller yet still material effect in 2018. To me, what it highlights, everyone is facing higher commodity prices because we're in a global synchronous upturn at the moment. But to me, what it highlights in terms of the margin that we're delivering on the business is the need for us to improve our overall fitness. And we have a number of initiatives underway that are addressing that and making really, really good progress.
And what inning are you in that fitness plan, in your view?
I'd say we're in the third or fourth inning. Already the teams have identified specific actions. They've monetized a number of those. The feedback that we're getting suggests that we should see some really, really big bottom line impacts that we can realize by the end of our business planning period, which would be 2022, but actually as early as 2019. So the progress is good, but there's more work ahead of us, and I hope, therefore, more opportunities.
What about the recently passed corporate tax cuts? What do they mean for you? Should we expect any M&A activity in 2018?
Well, what it means for us very specifically in the short term is we picked up about $400 million of good news. It was non-cash in terms of our taxes in 2017. But the biggest impact going forward is that it means that we'll pay a very low cash tax rate for an extended period of time. So that's the main benefit. A secondary benefit is the effect on Ford Credit, which is a separate entity, should mean that we'll be able to get more cash flow from Ford Credit to Ford Motor Company in 2018, which would be great.
So any M&A on the horizon that we should be looking at?
Well, we're certainly open to that, particularly in the new areas of opportunity, whether it be autonomous vehicles, whether it be mobility, services, and so forth. So we've already made a number of actions on that front. I'm sure you'll see something more ahead of us, but I wouldn't say anything specific due to the Tax Reform Act.
And update us on your self-driving car efforts. Should investors be giving Ford more credit on that front?
Well, this is a big opportunity for the longer term. I think for the whole sector, there's a lot of people that are trying to figure their way forward in that regard. We have a very active program. We just talked more about that at a conference here in Detroit around three aspects of it. A purpose-built commercial-grade vehicle, and certainly the technology around that and how we're working to integrate the brain and develop the brain with a group that's inside Ford called Argo AI. And then lastly, the business model itself and the infrastructure that we plan to put in place around that to bring to life the whole business opportunity. Scott, this is something that's going to play out, I think, over a longer period of time, but certainly we're eager to get going and still believe that we can have something in the marketplace by probably around the 2021 period.
And Bob, just very quickly before we let you go, NAFTA talks are ongoing. What would Ford like to see happen to NAFTA?
Well, we certainly would like to see it continue. We think it's been important not only to the sector but to the economy of all three countries, including the U.S. What we would like to see is for the agreement to be modernized, and that to include provisions against currency manipulation. We'd like to see some work done in terms of standardization of regulations across the markets. But overall, we're certainly hopeful and supportive of NAFTA continuing, although modernized.
All right, Bob Shanks, we'll leave it there for right now. Thanks very much for coming back with me.